Howdy. Welcome back to Dion Talk. When or how can a bond lose money? This question actually comes from a question that I got from a viewer who asked me a question that I am going to make a video on.
But not today.
But it prompted this question for me to ask somebody who actually understands this industry. The question was, I'm an investor, but I can't find a deal currently. I understand his market or her market, prices are too high, interest rates are too high, so they're not finding the deal. So they said, I have about $100,000. Should I buy a bond that will pay me 4%? Or should I focus the money and pay off a mortgage on a rental that's at 4% interest? Follow-up questions came from people. So that's what my video will be about. But what I'm asking Michael Zuber today from One Rental at a Time, thank you for taking the time to share your knowledge with us, is how and when can a bond lose money? Because I often hear them as the safest investment vehicle.
So this is kind of a deeper question, and we'll kind of walk through it. So it's funny that you bring this up because I asked my Wall Street veteran, I have Taylor, who's on my show every Tuesday or Monday. I think it's every Monday. He's a 10-year Wall Street vet, right? That's what he does. He runs ETFs now. So he's pretty big time. And we did a video the other day where Michael Zuber, for the first time in my life, was going to go out and buy the 1-year bond. And Taylor's first question was, Michael, are you going to hold it to maturity or is this a trade? Because that is important in this discussion. Well, why is that important? And my answer to Taylor was, if I buy it, I will hold to maturity. So when you do that, the bond won't lose money. Your, in this case, 100K principal will be returned to you at the end of the period, and you will earn your 4% annualized return. However, you will hear all the time that the 60-40 portfolio, 60% stocks, 40% bonds, is having a horrible year. Bonds have lost money. Bonds have lost a lot of money. Bonds are down 20% this year. Well, how the hell can that be? Well, because bonds could be traded. Bonds are one of these interesting things. When interest rates go up, values go down. So for example, if you bought a bond at 2%, and suddenly now the same bond with the same duration is at 4%, your bond in theory is down significantly. And that's how. So if you were trading bonds, you could absolutely lose a lot of money. If you bought a bond to trade at 2 because you thought rates were going down and rates went up, you lost your ass. But if you buy the 2 and you hold till duration, you get your 100,000 back plus your 2%. So it depends on are you a trader or are you just buying literally what bonds were, intended for to hold to duration? So you do have duration risk, which is what they call the trade. But I'm not that guy. I don't trade bonds or any of that. If when I buy a bond at 4%, I want the 4. Basically, I'm replacing it with dead money in a savings account or money market account. So does that help?
It does. So if somebody buys the bond and it's a 1-year bond at 4%, and then they have a life event at 6 months, and they have to sell the bond before it's reached maturity,
they could lose money.
How much would they? How would the loss work?
So this is played out again. This is all interest rate. So if you buy it at 4, it's $100,000. 6 months later, you have to sell it. If rates are at 5%, mathematically, you could be down 20%. Right, the bond is just worth less. Right, that's just a ratio off my head. It doesn't trade quite that leanly, but you could be down significantly because that same bond's now 5%. But if bonds go the other way, and we're only talking about losing, you could make money too. Let's say you buy a bond at 4%, the world comes to an end, Fed has to cut rates, suddenly rates are 1% again, your bond's worth a lot more money. So it could, this life event could happen either way. So bonds can gain and can lose. It's basically the delta between your interest rate at purchase and the current rate in the market. So it could be good, could be bad.
Okay, so there's really 2 versions of it then, to sum up in layman's terms.
Sure.
If you sell before maturity, the current interest rate, if it's higher, your bond will be worth less. And if the interest rate is lower, your bond will be worth more. But if you carry it to maturity, you will always get your money back plus the interest of the bond.
You got it.
Okay, that helps me answer the question that I'll be making the video on if you can't find a deal in your market and you have $100,000 to invest, should you buy a 4% bond or pay off a mortgage that has 4% interest?
I got a little bit more for you. So this was all about treasuries. There's a couple of things about this question. So treasuries have some tax benefits as well. You'll have to check this and verify it, but I believe treasuries don't have state income tax. I believe. So you have to check that. Do you want to say something?
In my research for the video, that was one of the topics I'm bringing up, and it's some.
Yes.
There are some treasuries that do and some that don't. So that'll be one of the
Okay.
factors to definitely look at.
And then the other thing you got to realize on a mortgage is you have the interest rate deduction, which if you paid it off, you would lose, right? So again, it's kind of both sides. So, and then you also lose opportunity cost and all those things about cash. It's just if I was going to get a 4% bond or pay off 4% mortgage, I would get the bond. I don't even think it's close. If it was a 4% bond and an 8% mortgage, I think that's a more interesting discussion. But that's just me.
I'm glad you threw that extra in there because we have opposing opinions.
Awesome.
If you'd like to see why I would choose the 4% mortgage pay down instead of the 4% bond, check out the video when I release it.
Yeah, you're just silly. That's not numerically correct, but I love the fact that you and I disagree. That's pretty cool.
I want to just say it, but I'm going to make the video. Mike,
Oh,
if somebody
no,
wants to
please
reach
do.
out for actual educated information on how things like this work, how can they find you?
One rental at a time, and I do a Saturday live stream most Saturdays, 8 to 9 a.m. Come join. It's a lot of fun.
Thank you. Until my next video, if I can wait long enough to make it, thanks for coming to my Dion Talk.
We're sorry, the number you have dialed is not in service at this time.